Right. Morning traders. Welcome back to Morning Cup by 8. Aiman here. So, looking at the S&P 500, so the index has recouped its losses following the last week Friday session. So yesterday, adding 91 points to close at 6329.93 points. So we believe that the market sentiment is now looking positive on the back of positive sentiment from the last round of earnings. Also, if you notice, now the market foresee a rate cut by Fed next month, which added some positive catalyst to the market. So this is the rate cut probability monitor tool, and looking at the consensus here, 93%, almost 94% analysts across the street are expecting a rate cut for next round of Fed meeting, right? So, okay, looking at our US trading stocks, that we have published overnight. So we have Toll Brothers, stock code TOL. So the stock is eyeing for a breakout above 123 US dollar level on accelerated volume. So if the bullish momentum to hike further and break out, so we can expect it to test the next resistance at 130 US dollar level before it climb higher to 135 US dollar level, right? Now, if the momentum to reverse and form a new lower low, make sure to have a stop loss at this support of 116 US dollar level. Next, we have Biogen, BIIB. So if you can see that the stock is tempting to climb higher and expect a breakout above 133 US dollar level. So now if the price continues to breach higher above the 133 US dollar level, we might see the stock to touch at 140 US dollar level before it might proper or travel higher towards the 150 US dollar level. So a reverse below 123 US dollar level will open the door for a deeper correction. Right, so looking at the Hang Seng Index futures, so the index has successfully rebounded after 4 sessions of bearish candlestick. Well, if you see here, the index found its support at the 50-day average line and closed higher at 24714 points. So I believe the sentiment for the Hong Kong market becoming more volatile as positive catalysts losing its momentum. So looking ahead, I think market are still waiting for the new development for the trade truce of US-China, which ending 12th of August. However, over the weekend, there's this interview with Hong Kong chief financial chief, which he foresee Hong Kong economy to sustain its recovery momentum in third quarter, leading to a relief for the Hong Kong market. So at this juncture, we still maintain our positive bias for HSIF. So let's monitor closely the price action on the coming session ahead if HSIF able to climb further, maintaining its bullish momentum for the previous session. Right. So for the for the WTI crude oil price, futures has continued its third session of pullback, now at 66.29 US dollar level. Well, so far, for the oil market, sentiment remains volatile or negative. Yesterday session lost by almost 1.04 US dollar. where recently the OPEC Plus has agreed for another uh, big hike in September. Also, if you remember, US has been pressuring India to stop buying oil from Russia in its effort to negotiate for the peace deal with Ukraine. Right. Well, at least for now, we still hold our positive trading bias for WTI unless it cross below the 64 US dollar level. Right. Back home, looking at our uh, FTLI. So you have the FTLI here. It has closed lower to close at 18 points. Well, so sentiment are still looking near term positive at the moment. Investors are now still digesting those macroeconomic factors, such as the tariff rate for Malaysia has eased near term, and also the near term geopolitical uncertain for Malaysia, at least for the near term outlook. Right. So, looking at our watch list here in the month of August, right? Uh, for banking names, we're still looking at the CIMB and also Maybank as you are waiting for any declared dividend to be made. Also, most stocks are experiencing positive gains yesterday. So, uh, uh, across the board, we have many stocks to choose from. However, to give a closer look at the stock that we have highlighted as it has higher potential for a breakout formation. Right. So okay. So for our Malaysia trading stocks, we have HE Group for today. So the stock has experienced a bullish breakout above 39 cent, supported by a strong trading volume. So we expect the momentum to strengthen and the stock to able to climb further to test the next resistance at 42 cent level. Followed by the one at 45 uh, cent resistance level. So if it happened to reverse and break out below 36 cent level, this indicate a near-term pullback, right? And up next we have SOP or Sarawak oil palm. So yesterday the stock has reached above 3 ringgit and 45 cent on a strong trading volume as well. So should the bullish momentum to hold and continue to trend higher in the coming session, the counter or the stock potentially testing the next resistance at 3.60 cent, followed by 3.70 cent. Well, if it dropped below 3.35 cent level, this would open the door for a further correction phase. Right. Looking at our FCPO. So the pullback persists yesterday, but it is still within the uptrend channel. So uh, yesterday the commodity gap down, if you can see here, but rebounded higher and closed with a bullish candlestick, but breached below our previous support level at 4,200 ringgit level. So the market sentiment for FCPO was a bit negative as there's this recent news, if you're aware, on the bets of seasonally high output driven by the improved labor availability, right? So in terms of demand, the price now is still capped by the strong demand from from one of the top consuming country, which is India. So for the time being, we still remain positive bias on in our report for FCPO with our stop loss level at 4,100 ringgit. And at this juncture, we still expect for a rebound in the sessions ahead, right? So I think that's all from me. I'll pass the floor to Jeff for his sector update. Thanks everyone. Happy trading.
Okay, thanks, Aiman. We have a telco sector update for today. This is part of the second half investment strategy report that we pushed out earlier. Basically, still a neutral view in terms of the sector as a whole. Stock picking strategy that is basically oriented towards the liquid large cap is favored. This is given the very tepid industry growth prospects as well as lack of meaningful re-rating catalyst. We continue to see the fixed line telcos outperforming on structural tailwinds. There is that concern over the mandatory standard on excess pricing framework, which is up for review by year end. So this looks to be a regulatory risk that that probably will be a key sector overhang over the next 3 to 6 months as a whole. In terms of the second half outlook for the sector, we think it's going to be more of the same, versus that of the first half. Industrial revenue momentum should be fairly subdued going to the December half as telcos maintain the affordable connectivity narrative via tactical campaigns. If you look at industry outputs, it's been well under pressure for the last 12 to 18 months. That's because of very elevated competition, particularly that on the fiber broadband segment. As you know, the mobile network operators have now all offered fiber broadband as part of a bundled service with mobile, effectively taking some of the competition or some of the subs numbers away from the incumbent, basically Telecom Malaysia. And TM has basically been defending, its packages as well. So they've actually come up with quite a number of rebates over the last 6 months. So we do think that this sort of tactical campaigns will continue into the second half of this year. Everyone's talking about higher cost of living, inflation, all that. So I think the telcos are very keen in basically committing to that industry, affordable connectivity sort of narrative. Maxis and CelcomDigi basically will be exercising their put options to acquire MOF's 41.7% stake in DNB. The timeline is towards the December month that they will be exercising their options. This basically marks the exit of the government from DNB. DNB is, of course, the what used to be called the single wholesale access provider. Obviously, the government had last year given the second access provider right to New Mobile, which is in the midst of rolling out their own 5G network. So DNB have, of course, been streamlined, no longer that supply-driven model that it was mandated before. So we think that with the streamlined structure in terms of both cost and also revenues coming from the tenancies and all, the wholesale framework, where the telcos have signed previously may be up for review. So this is something that the telcos are in discussions. Obviously, DNB is being held by the three major telcos now, which is Celcom, DG, Maxis, as well as YTL. So they are the remaining shareholders in DNB. I think they will basically exert or influence the policy decisions of DNB going forward. The MSAP is basically a review of the wholesale structure. Basically, MSAP is the ceiling prices for broadband access. How much TM basically charges to network providers for access to the fiber. This is a review that's coming up by end 2025. Typically, if you look at MSAP, it's actually up for review every 2 to 3 years. So the next review timeline is end of 2025. With the new rates taking effect in 2026. The current rates, which was implemented in 2023, there was not very much a shake-up in terms of the broadband retail prices, as competition is already quite keen. So we think that based on the previous rhetoric and the fact that competition is already very intense, we think that even with new access prices, I think the impact on TM largely will be quite manageable. Rates are basically commercially negotiated between the access provider as well as the access seeker. So it's not, it's not usually it's not the impact of the headline rates that you see on the new published access rates. So it's very possible that the regulator MCMC may decide to extend the validity of the current rates. If they so chose to do so, it will be announced towards the later part of this year as well. Also, I want to indicate, I just want to reflect some press reports that have come out over the last couple of days with regards to the Jendela program. This is basically that connectivity program that the government has come up with. It started way back in 2020. 2022, they completed the phase one of that program, and I think the whole sector and industry has been waiting for phase two, which was supposed to go out sometime in 2023, but we've not heard anything since. But I think, the communications minister, Dr. Fahmi Fadzil, has basically said that, it will start sometime in September. The decision now is to basically use a hybrid approach. So, it's not all about just rolling out towers, in the remote regions and all. It will be actually a combination of, monopoles, fixed wireless access, even using Starlink, low orbit satellite. So new technologies will be considered. 3,000 sites nationwide identified. I think the value of this would be much lower than that of Jendela Phase 1. Jendela Phase 1 is actually over 20 billion in terms of capex. So this one, we're looking in terms of single-digit capex commitments. So obviously, it's good for the tower cos and MNOs that are taking part of this. This is basically a USP, probably a 60-40 USP split. USP basically is a budget that's really coming out from the regulator for expansion of network footprint in some of the underlying areas. So, OCK Group, Rich 10 Holdings, Red Tone, these are the typical names that will benefit from Jendela. The next thing is really, that's really been prepping up the flows on Telco sites, really Axiata. If you look at the share price, it's actually come off from a multi-year low in April. That's really, on the back of news that, they're looking to monetize some of the assets, particularly that of E.co, the tower company, which is 63% owned by them. We think a 3 to 9 month window is highly probable for a transaction to materialize. This is well supported by improving market appetite. There's interest rates are coming off. Internally, they have a net debt to EBITDA target of 2.5 times by end of FY26. So it's incumbent upon them to basically monetize this within that timeline to basically fix a lot of the balance sheet issues that they have. So if you look at valuations of E.co, various permutations here, but I think 8 to 12 times EV beta is something that the market is looking at, potentially valuing that asset at between 4 to 8 billion. So if you actually use that proceeds from the divestment to repay some of the borrowings, I think Axiata has well over 20 billion in terms of debt, and 40% of this basically USD debt at the holding company level, which they are basically looking to repay. So, proceeds from the sale of E.co can basically use to repay the USD debt, contributing to lower net debt to EBITDA. Potentially, this will go down to under 2 times by end of 26 if that monetization comes about. So, watch this space. I think there will be some developments then. Obviously, this is one key really catalyst for the stock in itself. So overall, top picks here are TM. We do prefer the fixed players over the mobile. For those of you who want that exposure, I think the large caps are basically preferred at this point, due to the stance we have in terms of the broader market. We also like Axiata, obviously, due to the balance sheet deleveraging story. Celcom DG is also another pick of ours in terms of the mobile play. We like that stock, for the fact that the network integration, it's been almost 3 years now, will come to an end, hopefully by end of this year. So they will be able to extract a lot more synergies from the merger, with the completion of the merger as a whole. Overall, I think if you look at key risks for the sector, it's really coming down to competition, earnings or dividend shortfall, and regulatory setbacks. I just want to flag that the dividend yields, for the sector is average about 4% odd, which is not not overly attractive, but still pretty decent when it comes to looking at yields across the CI component stocks. So, still a neutral view in terms of the sector. Top picks are basically TM, Axiata Group, and CelcomDigi. So I'll stop here for today. I think that's the only report that we have. I'll see you again tomorrow, bright and early on Morning Kappa. Thank you.